Hello and welcome to Coin Chief. Based on looking at older channel analytics, it became clear to me that I was onto something when I was talking about crypto taxes. So I've decided to put together a little more on the topic with a short series on crypto tax calculation. Now I'm going to start it off today with a video on what is and isn't taxable. And then I'm going to follow it up with how to calculate cost basis and report to the IRS, some tips for making your life easier, and then what to do if you're already in a bit of a wrangled mess, and then finally some advanced strategies for reducing or eliminating your crypto taxes. Now, by the end of this video, you'll have a solid understanding of what cryptocurrency transactions are taxable, the ones that aren't taxable, and then how to account for those random income producing events like airdrops, interest payments, staking, and those sorts of things. Now, before I get started, I would just want to say, if you appreciate this kind of information, I would appreciate a like and subscribe. It helps with the YouTube algorithm and all of that. So having said all that, let's get started. Now, before I dive into the meat of the topic, I've got to get the disclaimer out there. I'm not a financial advisor. None of this is financial advice. I'm not a CPA. I'm not a crypto CPA. I'm just a guy who had to figure out crypto taxes last year and has picked up some information along the way. So I'm sharing that with you. So, fourscore and roughly 7 years ago, the IRS put out this notice. It's notice 2014-21. I will include links in the description that lays out their guidance for cryptocurrency. And the important part here, we'll scroll down to page 2, section 4 is the frequently asked questions. And question 1 right here is, how is virtual currency treated for federal tax purposes? And it says right here, for federal tax purposes, virtual currency is treated as property. General tax principles applicable to property transactions apply to transactions using virtual currency. Now, what this means is very simple, but it can get complicated. And I will explain this in later videos. But if you have fairly straightforward transactions, you buy and you sell, or you buy and trade into another currency in whole numbers, you really just need to calculate your cost basis. It's very similar to what you would get from a brokerage house or something for some standard stock investments or anything like that. You need to know the cost basis when you acquired it, and the cost basis when you disposed of it. And this can include fees on both sides, because if you've been in cryptocurrency for a while, fees are everywhere. So by all means, deduct your fees from the cost on both ends, because it's going to work out to your benefit. Now, you might read this, or you might initially think, well, that's great. I'll just never sell back for dollars. Not so fast, my friend. If you scroll down here to page 3, question 6, does a taxpayer have a gain or loss upon an exchange of virtual currency for other property? And remember, property in this case is cryptocurrency is property. So that means if you bought Ethereum and you sell for Bitcoin later, then you've cashed out of dollars, for one, because the IRS only does business in US dollars because that's the national fiat currency. So you've essentially got two transactions there. You sell Ethereum for the fair market value in dollars, and then you bought Bitcoin at the fair market value in dollars. So believe me, they've got you covered there. Now, going back up to page 2, question 3 here, you might be thinking or asking yourself, what about mining or getting paid in cryptocurrency, or staking interest income, all of these sorts of things? So these are all addressed as well. Essentially, what it boils down to is those are all counted as income. It says, must a taxpayer receive virtual currency as payment for goods or services, including computing gross income, the fair market value of the virtual currency? Yes. So you're going to need to track that fair market value as of the time you receive said currency for when you eventually dispose of it, because in most cases you're going to dispose of it at some point there may be a few that are kept for a very long time, but those are probably the subject for another video. So we get into the calculating basis here. What is the basis of virtual currency received as payment for goods and services? It's the fair market value of the currency in US dollars as the date of receipt. That seems redundant with question A3 or question 3. Now this notice also gets into discussions on mining, whether this is self-employment tax. The bottom line is any cryptocurrency that's received that wasn't purchased is going to count as income. Then later on, when it's disposed of, that's when you're going to realize a capital gain, or you could have a capital loss. So let's cover real quick what is taxable and what is not taxable. So as previously stated, what is taxable is selling cryptocurrency at a gain or a loss. These are both, it'd be capital gains or losses depending on the situation. Even if you're swapping for another crypto, as I mentioned before, you'll need to have 2 transactions, one for selling into US dollars and one for acquiring the second cryptocurrency in US dollars. If you buy something with crypto, say you buy a ledger from a company online and you pay for it in Bitcoin, you'll have to account for the transaction in the fair market value of Bitcoin as of the date of the transaction. That will be your exiting that position or part of that position. And then receiving crypto for payment of any kind, whether it be hard fork, mining it, airdrop, rewards, staking, those would all be counted as interest. Now, just as important as understanding what is not taxable, and this may make things a lot easier for some people, just the act of buying crypto as of right now is not a taxable event in the United States. It could be in the future, but as of now, it's not. If you buy it and hold it, there's no tax burden there. Transferring crypto from one wallet or exchange to another wallet or exchange, that's not a taxable event. It could cause you pain in the rear end later, and I'll cover that in one of my further videos. But that is not a taxable event. And then finally, the same IRS regulations apply to donating crypto to a tax-exempt organization as they would with cash. And finally, I'd be remiss if I didn't mention you can also gift crypto below the same IRS thresholds that are allowed for cash. Don't quote me on the amount. I believe it's in the $13,000 to $15,000 a year range. Could have changed. I don't have that number in front of me. That does it for this video. Thanks for watching. If you've got any questions, comments, any further topics you'd like to see covered, if you'd like to tell me my microphone sucks or my lighting's terrible or I need to cheer up in the video, let me know. Feedback is very much appreciated. Be sure to come back for my next video where I will go over the ins and outs of actually calculating your cost basis specifically, and then kind of walk through reporting it to the IRS. Until next time, I'll see you. Thanks.